Hello everyone. How are you today? Hope you are fine and good. We continue Chapter 3, Accounting Cycle, Week 7. Are you ready? Let's go. Learning Objectives 3.5 A Trial Balance. A. Explain the uses of trial balance. 3.6 Financial Statements for Merchandising and Services Entities. To explain the definition of merchandising and services activities. B. Explain financial statements for merchandising and services entities. C. Explain the limitations of financial position statements. (3.5) A trial balance. Trial balance, list of all the general ledger account balances at a given time. Accounts with debit balances appear in left column, and those with credit balances in the right column. The total on the debit side of the trial balance must be equal to the total of credit side. The trial balance is a summary of account balances of the ledger. Uses of trial balance. A trial balance is prepared to confirm, verify the balance of total debits and the total credits at the end of an accounting period. A trial balance is a necessary checkpoint for uncovering certain of errors. Total the debit and credit columns to prove equality. Students, take a look at an example of trial balance. Limitations of a trial balance. A trial balance does not guarantee freedom from recording errors. Numerous errors may exist even though the totals of the trial balance columns agree. For example, the trial balance may balance even when 1. A transaction is not journalized. 2. A correct journal entry is not posted. 3. A journal entry is posted twice. 4. Incorrect accounts are used in journalizing or posting. 5. Offsetting errors are made in recording the amount of a transaction. (3.6) Financial Statements for Merchandising and Services Entities. Definitions of merchandising. Meiden and Dickinson are called merchandising companies because they buy and sell merchandise as their primary source of revenue. The primary source of revenue's merchandise is referred as sales. Cost of goods sold is the total cost of merchandise sold during the period. A multiple-step form income statement prepared by merchandising companies. Definitions of services business. Laundry and the provisions of cell phone services by Cellcom are called services companies because they sell services. The primary source of revenue's merchandise is referred as services revenues. There are no cost of goods sold period. A single-step form income statement prepared by services companies. Preparation of financial statements. Preparation of financial statements for business merchandising. Preparation of financial statements for business services. Comparative statement of comprehensive income between merchandising business entities and services business entities. Income statement format examples. Example, owner equity statement. Sample format statement of financial position. Limitations of financial position. Dependence on historical costs. Transactions are initially recorded at their cost. The values of assets and liabilities may change over time. Thus, the balance sheet could be misleading if a large part of the amount presented is based on historical costs. Intangible assets not recorded. Many intangible assets are not recorded as assets. Instead, any expenditures made to create an intangible asset are immediately charged to expense. Based on specific time period. A user of financial statements can gain an incorrect view of the financial results or cash flows of a business by only looking at one reporting period. Not always comparable across companies. If a user wants to compare the results of different companies, their financial statements are not always comparable, because the entities use different accounting practices. Subject to fraud. The management team of a company may deliberately skew the results presented. This situation can arise when there is undue pressure to report excellent results, such as when a bonus plan calls for payouts only if the reported sales level increases. No discussion of non-financial issues. The financial statements do not address non-financial issues, such as the environmental attentiveness of a company's operations, or how well it works with the local community. Not verified. If the financial statements have not been audited, this means that no one has examined the accounting policies, practices, and controls of the issuer to ensure that it has created accurate financial statements. No predictive value. The information in a set of financial statements provides information about either historical results or the financial status of a business as of a specific date. The statements do not necessarily provide any value in predicting what will happen in the future. Thank you. Bye.